Mhm. So the Well Warehouse Limited engaged in business of warehousing, handling transport along with the relevant auxiliary service like pest control, rendered control, fumigation, security, etc. A statement of profit and loss account of the company shows that the main source of income is storage and the maintenance or usages. A substantial part of the expenses related to the salary of the employees engaged in the maintenance and upkeeping of warehouse. The company has filed, so they are maintaining expenses. File return of income showing that business is letting out of business and show good own spaces income from a business. From business. Housing office rejected the view of the assessee and assessed the same as income from house property. Okay. Mm. So comment the validation of the housing officer. So So this Wellcare business warehouse limited, what they have warehouse. So there are many rooms that they can store something. Then in that warehouse they are having handling and landing charges with the relevant auxiliary service like in that warehouse they have pest, rotten control, humidity control, security that also they provide. It's all on the primary businesses warehousing. So in the warehousing businesses, they will be having that. Many rooms. Whoever want to rent it, they can rent it. For that monthly, this much rent is being charged. If you want to pest control all this, these are different charges you will collect it. What income tax authority is saying, you are renting and renting means specifically for residential renting, no it's residential. It's like warehouse. You can keep your things there. So of such kind of activity, what is the procedure? I mean, what do you mean? So, if this kind of business, they have created our business to have this collect the rent and pay this municipal taxes, the employee charges, and as a consider as a business income. But what they are saying is the income from house property. Income from house property means what will happen? It will have a standard deduction of 30%. Not and the standard deduction of municipal taxes and other property taxes, maintenance, any repairs and maintenance that can be deducted as expenses. Other than that, they can charge any other expenses. So only 30 percentage of the be considered as expenses, which is 70% you need to pay as per slab rate. So what happens? Your income is increased. What happens if you give in the business income? If you give in the business income, services 50 percentage, 44 ADE. 44 ADA. 50% is booked as eligible expense. Only 50% is chargeable tax. So there became a substantial part. Even they have a renting business, they have, yeah, in this case, renting business is liable to GST. That's not a problem. But income tax, they can wait there. 75% is 70% different case, 50% is totally different case. That is the case. The client is saying that I'm eligible for 50 percentage of the 44 ADM going on. Asking of saying no, you are renting, so you want to have an what? You want eligible for income from house property. Section 24B standard deduction 30% only available. That's what their argument. You'll see. So the issue under consideration whether the income from let out of goods or provision of warehousing services is acceptable under the head income from house property or profit and gains of a business or profession. In this case, the company activity is not merely letting out of warehouse but storing of goods and provision of several auxiliary services like pest control, rodent control, humidity services or preventing the goods stored has been affected by vagaries of moisture and temperature. Further, service of security and protection is also being provided to the goods store. Therefore, is no dispute in the company is carrying on the warehousing activity as an organized manner. This activity is not more than letting out of a good own for tenancy. The statement of profit and loss account of the associate company shows that the main source of income is storage charges and maintenance charges. Even substantial part of expense also related to salaries, employees engaged in maintenance and upkeeping of godows and warehouse. Based on this fact, there is evidence that income earned by the assessee is let out of good own provision of warehouse service chargeable to head under PGBP and not under income house property. This is proved with an judgment what Madras High Court CIT, which is NDR Warehousing Limited. So, in a question, if they ask such kind of question where you can't able to distinguish, so you can't be a judge of the character, judge of the case. The only the case study can be the judge of it. So you should mention the case study as per this judgment, this example. This judgment carries the mark. Madras High Court is NDR Warehousing Private Limited 2015 C 375 ITR 690. This is the case you want to write. If not, you don't write the exam. In this citation, you won't get a mark. So, according to the assessing officer, bringing tax into income under the income from house property, it's not valid. May 1 CB actually measures a resident income company. Fourth April 2024 borrowed 100 crores from A Limited. Companies incorporated in US with interest rate of 9%. The same said loan is prepaid over 10 period years, 10 years period. Then further loan is guaranteed by Mr. B Limited incorporated in US. Mr. K is a non-resident who also shares of 30%. Okay. The voting power of Mr. Yeah, X and X and M, B and Mr. K is also be deposited 100 crores with the MSE. Okay. So what X Limited resident borrows 100 Mr. A and the 100 crores they getting loan for a 10 years period for 9% interest. And the loan is repayable over 10 years and the further loan is guaranteed to Mr. B. Further loan is guaranteed by Mr. B incorporated in US. Okay. Mr. K is a resident, non-resident who also share 30% of voting power of Mr. X Limited as a Mr. Me INC and me. So okay, and Mr. K is also deposited 100 crores with Mr. A. So they are all related parties. Other information: net profit of the Mr. A is 10 crores after debiting the above interest and depreciation 5 crores and income tax 3.4 crores. I calculate the amount of interest to be disallowed under the head profit and gain of business profession computed in Mr. A. So this is to the 19th question. By Mrs. B Limited. Further was granted by Mr. B and Mr. K is an non-resident holds 30% voting share in Mr. X. Okay, and Mr. B. Mr. K is also deposited 100 crores with Mr. A. Okay. So what happened? Mr. K has given 100 crores. The Mr. A is given to X Limited. X Limited is repaying them to a various party. Now thing is the interest 100 crores, 9 crores per annum interest. Is that eligible expenses to you add back? So excess of interest shall be the amount of interest paid is payable. Excess 30% of earning before tax. The tax and depreciation, amortization, borrowing previous year. In the interest paid payable associated with the enterprises is net profit 10 crores. Correct? And net profit of MS Limited 9 crores because 9 crores interest. So interest and depreciation 5 crores. Income tax I want. Earning before taxes 27 crores. So the total interest paid not to a resident associate enterprises 9 crore. 30% of DTE of 27.4 is 8.33 crores. Interest paid to non-residents 9 crore. So lower of it 8.22 crores. Excess interest to be disallowed in this computation is 0.78 crores to be disallowed. Total interest paid to non-resident associate enterprises is 9 crore. Excess of interest to be disallowed is 0.78 crores. Interest to be deductible is not 9 crores, 8.22 crores. 0.78 crores disallowed. How it is found? Total net profit plus interest plus depreciation plus the tax paid. Total we are 27.4 crores out of the 30%. What is that? 8.4, 8.22. 9 or 8 point, whichever is lesser. So 8.22. So 8.22 minus 9 minus interest paid. So 0.78. 0.78 will be disallowed. And what they are saying is pay more tax. If you pay more tax, you won't get it. The excess interest is disallowed 0.78. Dr. Judy report to you that her gross receipt from her medical profession in the year is 49 lakhs. Now her net income as per the income and expenditure account is 26 lakhs. Before adjusting the depreciation of 2,10,000, she did not pay any amount by the way of advance tax during the financial year. She has two resident house property, and which is one is self-occupied residence and other is letter property, monthly rent 10,000 for the financial year. Advice duty to reference of 44 ADA and filing the return of optimal tax liability. Besides a complicated compliance cost, assume that she approached you on April, you have given your disadvice. So what is it? 49, 50 lakhs below. So 44 ADA he can apply. 44, 49, 20 lakhs now 50 percentage. That is 2, 4, 6, 2, 4 lakhs 7,000. Okay, they are calculated. So on 24 lakhs tax will be paid. And additional they have a income. This is monthly tax. So 1 lakh 20,000 rental income is there. 30% in municipal tax can be reduced. So 30% 1,20,000 divided by 30 into 30 percentage, 36,000. So 36,000 can be reduced, 1,20,000, 36,000, 84,000, actually 84,000 plus this 84,000, 26 lakhs, 25 lakhs, 44,000, correct? So, and 40 special provision on computation of for profit and gains of the profession, presumptive profession, notwithstanding anything in the section 28 43C. In the case of assessee being an individual partnership forms, any other LLP who is resident in India, who was engaged in profession, whose trade gross receipt does not cross 50 lakhs in a previous year, a sum equal to 50 percentage of the total gross receipt, assessee shall be deemed to be profit and gain in the profession charged in the section. And they should need to give another section, that is as per section 144 they need to make books of account because it was crossed 24 lakhs. They have not mentioned. Okay. Important section. And tax on first 25 2 lakh 50,000 0 2 total, and 5 to 20 percentage, 15 lakhs to more 30 percentage, so totally 5 lakh 75 700 plus 4% education 5 lakh 70,000. Computation of total income, total in provision as per income tax act. Depreciation where it comes on, an adjusted depreciation of 2 lakhs or something. Okay. So net income expenditure 49 lakhs. Depreciation 2 lakh, 24 lakh 30,000. 24 and 25 14. Here how much we have 25 44 25 14,000. 25 14,000 first 10 lakhs 12,000. Next 15 lakhs 4 lakh 4 lakh 5 lakh 66 700 coming plus cess 5 lakh 89,000 737. If this 44 ADA, normal books of account statement of total income of Dr. Judy under the normal provision of income tax. So interest payable is interest due 1 month from section 244A. A is not come. Late filing of return only will come. So B and C 1% per month for 1 month. 1%, 1%, 2% we add on 11,000. So 5 lakh 98,000 plus 11,000 600,000. That's 5 lakh 98,000 plus. Advanced tax and normal provision is 44 AD while filing the return. When you file na, this month you will see. So only 1% plus 1 percentage for 3 months, 45%, 75% you want to get, 240% based on that competition you want to come. Yes, yes. 15 percentage of 5 lakhs 498, 45% 7,000, 75% 3,000, 1 percentage 5 lakh 90,000. That is 29,000. So 5 lakh 89,000 plus 5,900 plus 29,000, 6 lakh 25,000. But here 6 lakh 10,000. 24 C 3 Oh. Calculation on the basis of the above analysis is advisable to Judy to file the return complexion of 44 ADA because the tax and interest payable is less than the tax interest computable not operation. Computation total income of Ms. Judy, house property. So net income before depreciation, net income before depreciation, after depreciation. Depreciation வராது. As total income no reduction under Chapter 16 not allowed. Income expenditure before depreciation. This is a computational total income for road and thousand. Thousand five BAC. Oh, tax paid under Section 115 BAC is this is 5%, 12%, 15%, 20%, 25%. You will get 5 lakhs under tax payable under 115 BAC is 5 lakh 11,000. 34 0, it's 1 month 5,000, 3 months to the 45%. Total interest payable 30,000. Total interest payable including this is 5 lakh 30,000, 5 lakh 42,000. Here 5 lakhs. So best to opt the 115 in conclusion. On the basis of the above analysis, advised that the duty to file the return of income under 115 BAC because tax and the interest payable in the less than the tax and interest payable section 144 ADA normal provision. There is also problem. This is to what is the problem? Even though if you say, but once we opt the section 44 ADA, you can't revert back to normal provision. Chapter 6 reduction is not allowed. That you should mention. La. So Demim Limited is incorporated 1st April to carry on the business on innovation, development and deployment of commercialize of new process derived from technology. It is hold the certification of eligible business under the notification IBMC Inter Board Ministry of Certification. The total turnover and profit of the gain for the business in previous year, the expected turnover and profit and gain of the following years. So this is previous year, okay, and this is all the expected years. 2015, 18, 20, 21, 25, 24, 25, and losses is to the income profit. In Demin Limited eligible for any benefit under the provision of Income Tax Act 1961? If yes, what is the benefit available? Turnover in crore. So tax audit first. Doing tax audit, they have losses of 2 crore 96 that can be carried forward to 1, 2, 3, 4, 5, 6, 7, 8 years. And this can be accumulated. So along with this, you will get here 3 4.02 crores profit. In this year, you need on this previous year, you need to pay only what 2.5 crores amount you want to pay tax. Estimate over estimate 2.4048% only you need to pay tax. On that amount only you have tax. Other than that, you will have only the benefit of filing income tax. This year you will get a tax exemption if you go for normal provision. And carry forward losses allowed based and see. Special provision respect of the section 80 IAC when the gross total income of the assessee is being eligible startup. They don't need to pay tax now. Yeah, they have a reduced startup percent 25 percentage something 18 percentage, including any profit and gain derived from the eligible business. They shall be according to the subject to provision of the section be allowed, and the computing the total income of assessees deduction of the amount is equal to 100% of the profit and gain derived from such business and 3 consecutive financial year. So total income of the C reduction amount equal to 100%. So the reduction specified under the subsection may on the option of the assessee can claim by him on any 3 consequent assessment years of 7 years beginning from the year when eligible startup incorporated. In the view of provision 80I3, the beneficial of the demin is claim under section for the previous year for 26, 27, 28. Yeah, 26, 27, 28. If they claim now, they need to not need to pay any tax. Computed total income reduction up to 100% of the profit and gains derived from the business for 3 consecutive years. So ding ding ding, they can carry for no tax. State with the reason whether the following transactions are subject to tax. The deemed income. XYZ Limited is a broadcaster of a news channel in India. It had come to payments to Malaysian company having no permanent establishment in India, for the downlinking television channels into India and international footprint through his channel. Um, as the payment, it had made payment to Malaysian company. Wow, no permanent establishment in India for downlinking television channels into India and international footprint through channel. Oh my God. Okay. Mr. A is a foreign citizen and diamond merchant from US has earned income of 10 crores from display of uncut and unassorted diamonds on Bharat Diamond Housing and notified special shows Surat. So what about their income? So in this case, no person has studied in India, but XYZ has paid XYZ has paid the television channel of Malaysian company. So they became the agent for the Malaysian company. In this case, US has an income of 10 crores of displaying uncut. He's not even selling. So that will be subject to tax because he is displaying something. From that, he is earning something. Na? Yeah, accrue arise in India. Section 916B, 9, subsection 9, class B6, any income by a royalty payment by the person who is a resident shall be deemed to be accrued arise in India in the hands of the recipient, except where the royalty is payable in respect of any right, property, information, or service utilized for the purpose of business or profession carried out to such person outside India. For the purpose of making and earning any income from the outside India. Explanation 2 of section 916. Royalty means consideration transfer of any right or respect of inter alia process. Explanation 6 and section 916 clarify the process including transmission of satellites, including conversion from a downlink of any signal. According to the payment made by XYZ Limited, resident India, since an Indian company, downlinking television channel into India, international footprint through a channel would be constitute royalty. Such royalty income would be deemed to accrue arise in India in the hands of Malaysian company not having any being in India. Since this payment by XYZ Limited, the company resident in India is in relation to its business in India. Second thing, Section 91E, in the case of foreign company engaged in the business of mining of diamonds, no income shall be deemed to occur in India. It through of activities which is confined to display uncut unassorted diamonds on any notified special economic zone. Since the benefit is available in the case of foreign company engaged in business of mining diamond, which a foreign company and diamond merchant of US cannot avail this benefit. The income of 10 crore from displaying of uncut unassorted diamond would accordingly deemed to arise in India. Mr. A is a virtue of business connection in India. Because SEZ they are showing now, it's shown to Indian people. Through SEZ, you are exporting something and you are earning outside India, not an issue. But it's a problem. Mr. B proposes to purchase for its business a certain raw material. Mr. Yes, in the view of scarcity of the products, as instant of cash material for the purchases. Okay. And Mr. B agrees as on 27. Three, the purchase was affected through cash invoice of 3,20,000. Oh my God. And with the respect of the above transaction, will there be any detrimental effect in the hands of Mr. B and yes, under the provision of Income Tax Act? Explain briefly. Will you answer differently? The cash purchase is offered by a buyer B two different dates in 1,80,000, 1,50,000. Section 269. Some expenses, cash expenses are disallowed. Among that expenses, one expense is any trader which by any purchase is made about 2 lakhs in a single day through a person through a transaction and payment is covered more than 2 lakhs that was totally disallowed. So in this case, a total amount of 3,20,000 received in cash. Then such payment is totally disallowed. What happens to that? The person who receives the payment can receive the payment can't explain these expenses. Made the payment, totally made the payment is disallowed for them because the total expense is disallowed. 30% of the what they payment made will be taxed. Mr. 269 ST shows that no person shall receive amount of 2 lakhs and more in an aggregate from a personality in respect of a single transaction, in respect of a transaction like the one event or occasion from this matter. A penalty for failure complying with the provision of 269 ST. If a person receives any sum in contravention to the provision of section 216 ST, he shall be liable to pay by way of a penalty 271 DA. The sum equal to the amount of the receipt. However, no penalty shall be imposed to such a person proves that the goods are sufficient reason for contravention. According to section 240A3, where the assessee incurred any expenditure and respect of which payment an aggregate payment made by a person day otherwise than the account pay check or a bank account or draft or use electronic clearing system through a bank account or through any other electronic media and specific 10,000 excess, such expenditure shall not be allowed as a direction. Conclusion: in the view of the provision 216 ST, Mr. S is liable to pay penalty of 3,20,000 penalty to pay. My God, who? Yes, need to pay 3,20,000 penalty as per the provision of section 40A3. The expense related to the purchase of raw material shall be disallowed in hands of Mr. B. Rama Cement, a company engaged in manufacture of cement. The company issued 20 lakhs equity shares of 100 to each general public. The shares were issued in premium 150 and as per the share. The assessee claimed a reduction section 35D in respect of preliminary expense of 5% on the capital employed added to the amount of share premium to the capital employed at 5% the eligible amount reduction of the section 35D. Okay. Assessing officer, however, disallowed such expenditure on the basis that the capital employed does not include a share premium amount. So, the said action, assessing officer tenable in law. They issue share. They have a right to have an preliminary expenses. What are the expenses? Share issue charges, share consulting fees, any other listing charges, listing requirement consulting fees. These kind of charges are preliminary charges. But the company incorporation charges are already built in the preliminary expenses which can be charged as an expenses in the 5 consecutive year on the pre-incorporation charges over the years. That is the rule. So for listing pre-income preliminary charges, that is not viable. So routine 35D, it's not good. In the case of Burger Paints India, the case of Supreme Court observed that the share premium collected by the assessees in the subscribed issued capital could not be part of capital employed in the business of the company for the purpose of section 35(3)(b). If it is where the intention of the legislation to treat the share premium as a capital employed in the business of the company, it would have been explainedly mentioned moreover. In the provision of the Companies Act 2013 dealing with the capital infrastructure of the company, provide the breakup of issued share capital, which should not include share premium at the day of description. Hence, the absence of the reference of section 35D, the share premium is not as part of the capital employed. Conclusion: action of assessing officer is tenable in law. The capital employed does not include in share premium amount. Very good. ND Limited Indian company has borrowed 90 crores, okay, from the MS TNT. The company incorporated in London at the interest rate 10%. The said loan is payable for 5 years. Further, the loan is guaranteed by Mr. Yes incorporated in UK. Mr. D non-resident holds 40% shares of voting for both ND. Net profit of the previous 11 crores after debiting the above interest, the 5 years and income tax 4 years. Calculate the amount of interest. It is very easy. This. What is the interest payable? 90 crores and 9 crores. What is what is the tax in 11 crores? What is the depreciation 5 crores? What is the tax rate 4 crores? How much? 5 4 9 18. Um, 18, 18 19 29. What is the tax rate? We have 30 percentage. What is the tax rate? 9.3. Yeah. Mm, Mm, and 7 to 6, 7. తెలీల 7.7, 8.7. So what is the interest? 8.7, 8.7 or 9, whichever is the. So 8.7, 8.73. So 8.7 is allowed depreciation. 3.3 is and BGBP. So in the books of interest, actual interest 9 percentage, 30% profit, 9, 10, 10, 10, 30 percentage, third point course, 3.7 is allowed depreciation. Then Rameshwaram is purchase put into use. Okay. Rameshwaram after purchasing put in use and 50 down 21. The mission worth 30 lakhs is eligible for depreciation 15 percentage under the act. He sold the machineries for Ganeshwaram for after 2 years for 3 lakh 20,000 good. The fair market value was on the date is 2 lakh 50,000. Okay. 2 lakh 50,000. So after having used the machine for the business purpose, again sold it back to Rameshwaram one. Oh, they're exchanging for 3 lakh 10,000. So again, calculate the amount of allowable depreciation of chargeable capital gain. If it is assessing of asset 2324, assuming that this is only a machine or block of asset held by both Rameshwaram and Ganeshan. So 3 lakhs they bought it and depreciated for 2 years. Then after they sold it to and sold it for 3 lakh 20,000. And fair market value is only 2 lakh 50,000. But who have used the machine for the business from first to 11 months they used after. Then after they sold it for 3 lakh 15,000. So on this first say they got a profit of how much? 50,000 capital gain, short term capital gain. Then after on repurchasing it, they incurred loss, but they repurchase it. They said we have a fixed asset of 3 lakh 10,000. I bought it for so the value of the project. So what does it say? The books of Rameshwaram actual 3 lakhs. Depreciation for this 3 years is 20,000. So of last April is 220,000. Sold on first 23, 3 lakh 20,000. So less 23 and 1 4 23 is 2 lakh 27. So starting capital gain is 40 to 500. Okay, very good. We're subtracting na for 500. That's a starting capital gain. As per the explanation, 43. One the assets used by the assessee in the business is transferred by him and later reacquired by him. The actual cost shall be lower of it. The actual cost of assessee reduced by the amount of depreciation that would be allowed by him. Actual reacquisition cost. So the actual cost of Rameshwaram is lower than 3 lakh 20,000 or 2 lakh 70,000. Depreciation is nil. Depreciation for the previous year 15% 20,000 20,800. Books of Ganesha's if explanation invokes by EAV. He thinks that the Ganesh acquired the machines high actually cost to claim higher depreciation. They may consider actual cost to 20,000 and ignore the purchase with like 20,000. Depreciation for the period 15 percentage of half a year is 18,750. And then WTV is 2 lakh 15,000. Sale on November is 3 lakh 10,000. After sale, the value is 2 lakh 31,000. Short term capital gain pay is 78,000. How 31,000? Sale is 3 lakh 10,000. So they have 78,000 profit. Based on this. They didn't ask the value of the books. But what is the short term capital gain? As a pre-resident individual sold 13 June, the depreciable assets name more than 36 months. It's a pre-residential individual sold 30 June. The pre-eligible asset more than 36 months and the investor they proposed to 30 June 2023. Okay. Exempt the validity of the order of processing officer, essential house property claim exemption from capital gains. Denying from the exemption of section 54E of income tax as the prior does not own any other essential property. Okay. Exemption section 54F would be available where the individual achieve transfer a long-term capital asset other than a residential house property and purchase a residential house property within 1 year, before 2 years, or 2 years after the date of transfer. Okay, another condition to be satisfied that availing this benefit of exemption that the individual should not own more than one residential property on the date of transfer of the original asset. Where the cost of the new asset exceed 10 crore rupees, the amount exceeding 10 crore rupees shall not be taken into the account of purpose of section. The deemed fiction created by Section 50, the capital gain arising on transfer of a depreciable asset shall be treated as a capital gain arising on the transfer of short-term capital gain asset. It's only for the purpose of Section 48 and 49 and not on the purpose of any other section. Section 54 of being an independent section will not be bound by the provision of Section 50. The nature of capital asset, whether the short-term or long-term, has been determined applying the provision of Section 2 Class 42A. Depreciable asset, if held for more than 36 months, shall be a long-term capital asset. It was to held by the Delhi High Court and CIT Raju Shukla and additions of the Bombay High Court in the case of CIT Axe Builders. In the case that depreciable asset hold for more than 36 months is transferred and purpose of invested in the span of 3 months, that is within the period of limit of 2 years from the date of transfer, the residential property exemption of Section 54 cannot be denied to Mr. Priya. Mrs. Priya does not own any other residential house, and she also satisfies the condition not owning more than one residential house on the date of transfer. Therefore, the action of the assessing officer is denying his exemption on Section 54F is not valid. So, thank you.